Hey everybody, Josh Sigurdson, World Alternative Media here, and of course we're joined by author and economic analyst here at WAM, John Sneisen, and I guess you noticed the white background. We're just going to try it out for a couple videos. Anyway, getting to the story, according to Mansion Global, half of the 50 largest markets in the U.S. are overvalued. U.S. home prices surged 7% year over year in September, CoreLogic says. And as the article goes into, home prices across the U.S. continue to rise in September amid a supply shortage and low mortgage rates, making half of the 50 largest housing markets overvalued, according to a CoreLogic report released Tuesday. The CoreLogic Home Price Index was up 7% in September compared with the same period last year. The biggest winner was Las Vegas, with Home Price Index increasing 9.7% year over year. Las Vegas, as well as Denver, Los Angeles, Miami, Washington, D.C., and New York, are among those overvalued metropolitan areas, according to CoreLogic. And then we see this list here of metro areas, the home price change and market conditions for select metropolitan areas. So Las Vegas, year over year, price change 9.7%, Denver 8.4%, Los Angeles 7.1%, Boston 7%, San Francisco 6.4%, Miami 5.5%, Washington D.C. 4.6%, New York 4.5%, Chicago 4%, and Houston 3.3%. And it shows that out of the 100 largest U.S. markets based on housing stock, 36% are overvalued. So scrolling down the article a bit, as far as states go, Washington 12.5%, Utah 10.5%, Nevada 9.5%, Oregon 8.8%, and Colorado 8.2% reported the largest annual price growth in September. So let's go into this a bit, John. Obviously, we've talked a lot about the heavily manipulated real estate markets, the push for collateralized debt obligations, once again, like in 2007, mortgage-backed securities, credit default swaps, just vast manipulation, derivatives across the board. We recently went into San Francisco. We've gone into Vancouver, Toronto, Seattle, in the UK, in Iceland, yeah. Oslo in Norway, Sydney, Australia, Perth. It just goes on and on because the fact is bubbles are expanding across the board. John, can you go into this?
Yeah, well, there's lots of housing bubbles now. What the main driver is, in my point of view, is people are afraid of the interest rates going up as several central banks around the world, especially the Fed, has raised their interest rates a couple of times now. They're saying that they're gonna raise it in December. A lot of people say that they're not, because of the economy is teetering again, and especially when you look at these new prices. It's quite unsustainable with that amount of rise every year, because what it does, it means that it becomes more and more unsustainable for the everyday person to actually be able to live, because you got to remember, underlying this is, for example, rent that is derived of the cost of to borrow the real estate in the first place. So that will increase as well on top of this, and what will happen is that people will have less. It's like an inflation bite, into people's pockets, together with food, oil, and other, commodities that we need to use every day. With this housing, of course, when housing gets more costlier, of course, the everyday person will then end up having less money in their pocket, which is going to hurt sectors like the consumer sector, where people, are buying a whole bunch of things, so on and so. It's going to hurt a lot of people again, and it seems like certain markets are back on it again. Las Vegas is one of them that got hit really hard during the last crises, and you can see others like Chicago, Los Angeles, of course, and San Francisco is there. Miami again is back into overvalued. There's a couple of other places there as well, but what this is driven by is, of course, again, the underlying cheap money that is getting pushed upon people from the Fed and everywhere else. So people are looking for yields. They're not getting it in the debt market. So what they have to do is they got to look at other places, but they take all this money and then go and invest it in elsewhere, everywhere over in real estate, because real estate is, if you invest it right, it could be great for a passive income, but the problem is a lot of people, in my belief here, are looking at the gains, just the capital gain that they're going to get from selling that house. And people that we actually had in other, I've been looking at some comments that we had recently and people are saying that they have 300,000 in profits, for example, on a house. Well, I asked them, have you sold the house yet? Well, they didn't. So you never have profits until you actually sell the house. The house is not an asset until it's actually sold for a profit.
Yeah, actually, I just recently got a message from someone on Facebook who was talking about how they bought their house for, I think, about 300,000 or something like that, and they sold it at 900,000. And I said, "Hey, good for you, you did." And then the man was wondering what to do with the money that he'd taken out and what assets to put it into, etc.
Well, that is a way of that. That's profits. So he actually made profits, right? Then you have the panic where people are sitting. Well, the everyday person is sitting on the house waiting for it to accumulate in value, using it as an ATM, refinancing every year as it goes up in value. At one point, it's overvalued, where we're seeing it starting to hit now, and also, of course, all over Canada and other countries as well. At that point, we're looking at what's happening in Oslo right now, where people are seeing it go down in value. They're stuck with high mortgages, and they're kind of panicking. They don't know yet what to do. They've been told that it's going to go up again, but my belief suddenly it's going to start going even further down, and at that point, suddenly the panic selling starts happening because people need to exit. They can't be massive, in negative equity, which means that their mortgages, 2 times the price of the actual house that they have, and so on. So that's the huge risk here. Suddenly you're gonna get that breaking point where people is like just gonna be like, oh, I need to get rid of it. For example, also BlackRock. We gotta remember the hedge fund BlackRock is a massive owner of single family homes, which is insane. It's a hedge fund owning a whole bunch of single family homes, which is completely crazy. Because they bought it from all the defaults that happened in 2008.
You mean they're kind of like the black bloc?
The black bloc
of housing, just gonna burn it all down?
Yeah, well, I don't know. It's just crazy and insane. So they want to have profits at one point, right? Mm-hmm. So what's going to happen is it's just going to be another massive sell-off in several markets. Now, of course, you can always make money in any market. Mm-hmm. That's the thing. But you have to understand and know and have the knowledge of how to make money in real estate before you start to get involved in it.
Yeah.
And understand that your house is not an asset until you actually get either positive revenue from it or when you sell it for profit.
Well, that's one of the big problems is so many people, as I often mention, just go and watch a TV show and see someone fixing up a house and selling it. So they buy it, they know nothing about the market, and they buy it often high, like in Vancouver, and they could lose everything at the snap of a finger.
Or it's the retirement plan.
Yeah, which...
It's even worse.
Yeah, that's unfortunate. And we could go into the pension issue at another time as well.
But the house is the retirement.
No, I know, exactly.
Yeah, exactly.
I know. There's just all these different sides of bad with that.
Yeah.
The market is crumbling right now. The bubble will burst. You can't really put a finger on when it's going to happen. But we see a lot of telltale signs with what the banks are doing at this moment, just like they did in 2007. And it'll be much more extreme than 2007.
Yeah, there's way more money slushing around.
I mean, John, what do you say to those? I hear from people all the time, especially in Vancouver. They say, well, if it's a bubble, then why is there there's so much demand for housing? There's always people here, and we can't get an apartment, we can't get a house because there's a waiting list. There's all these people that want to come in. Doesn't that mean there's a high amount of demand? And can you go into their concerns?
Yeah, with the demand issue, it depends on where you are. For example, in Oslo, I know Oslo way better than Vancouver because I haven't been in Vancouver. Now, but in Oslo, I know there's a lack of space because of the way the city is built. There's lots of mountains around, which is very similar to Vancouver, I would think. So it's a limited amount of space that they can actually develop on. So you got into a point where you have a Hong Kong type of city where people are living in, I don't know, like I think it's like 20, 30 square foot little boxes.
Well, actually, a friend of mine went to go look at an apartment in Vancouver, and the ceiling was 6 feet high. Think about that. Anyone that's like even
that sounds like an Asian
5'8"
developer. Not to we're not being racist there, of course, but it sounds like somebody is used to develop for that, which doesn't make sense. If it's Asians in there, it's not like a lot of Asians are shorter than others.
Unless you're talking Yao Min, but
but they're very smart people, and that's why they're going out and buying stuff everywhere. These like Asians that I know. They are very successful business people. They're very disciplined, and they really, go in there and work really hard all their life. And they're not like what the Westerners have become, lazy bums living off the government.
Yeah, absolutely. And Just kind of finishing it off. So these markets are coming crumbling down. So is the monetary system, both manipulated into oblivion, and we can thank government and banks for that. And in the end, the fundamentals are off the table due to the level of manipulation in the monetary system as well as in the markets, because there is so much centralization, there is so much manipulation, but we know it's going to happen, so therefore people have to keep themselves safe. And to keep yourself safe, a few solutions are, first of all, stay out of like overheated real estate markets. There's a lot of good places to buy. There's still a lot of good places to buy.
And there's fundamentals to look for when you buy something.
Yeah, absolutely. I mean, Winnipeg, Canada is actually somewhat of a decent place to buy.
Because we're extremely well diversified now. I've been selling investments here in real estate and so on. So what I saw is I had to really understand how real estate worked, and one of the things you look at is how diverse is the economy. Mm-hmm. Now, of course, it's not very good the way it's diverse. In my point of view, it has the agriculture, which is good. You know, we got the food, covered, but we have a massive financial and a massive government sector, which is not that good.
Which is going to overheat it even more.
But anyways, so that's what you got to look at that, and how many people's coming in versus going out. Absolutely. There's a couple of important things that you got to look at to find a decent market that's not crazy like Vancouver, Toronto, or somebody that's heavily dependent on one resource like Calgary or Edmonton.
Yeah, so don't look at your house as an asset. Don't, like you said, unless you're selling it.
Yeah. Understand the fundamentals.
Understand the danger of collateralized debt obligations, which is a package of a bunch of bad mortgages with a few good ones rated by the top. AAA, which is insane. The credit default swaps, mortgage-backed securities. We're seeing that with BMO, and we've seen that recently with Citibank and Wells Fargo.
Don't put them in your pension portfolio.
Yeah, absolutely. Don't expect your pension either way if you're people as young as John and I. And then on top of that, the solutions are food, water, shelter, and of course, defense. So you're not gathering things for the toughest guy on the block, gold, silver, assets that are really tangible. And then, of course, that which is decentralized, Bitcoin, other cryptocurrencies, Dash, OMG, I like, Steam, things like this. But anyway, there are a lot of solutions, but first you have to understand the problem to apply the solutions in order to make the change so that the government you're not sitting there apathetic waiting for the government to do it for you, because they will not do it for you. They are benefiting off of your debt. They are benefiting off of your servitude, and that's what comes with the debt. Exactly. As I so often mention, if they push you down a bottomless pit of debt, you are forced to ask for a ladder up from the government and the banking system, and that puts you in perfect servitude. So we are going to end it off there. So thanks for going into this with us, John, and until next time, this is Josh Sigurdson and John Sneisen signing out from World Alternative Media. Find the truth.
Be the change.
Thanks for watching, everyone. Check the links below. GoFundMe, Patreon. We can't do it without you. Any donation is very much appreciated, especially as we are so vastly demonetized by the Anti-Defamation League on YouTube, as they flag all of our content as hate speech. You can also find our Bitcoin address in the description in the comments, as well as on the screen for you to scan if you please. You can also find me at Josh Sigurdson at steemit.com. That's steemit.com, the future of social media, as a dinosaur social media digs its own grave. You get paid in cryptocurrency, Steem that is, on steemit.com via the upvote of your posts. So I hope to see you there. But until next time, this is Josh Sigurdson signing out from World Alternative Media. Find the truth, be the change.
Bye.